I welcome you all for the today's program on startup, how to create benefits under income tax and other benefits. Bangalore is being the second biggest startup hub, and a lot of startup companies are coming up even now. There is a separate department itself is there in Bangalore. They provide a lot of benefits to startups, certifications, and handholding sessions for that. So in this regard, we have an eminent speaker, none other than Mridhul Agrawal. He is going to speak on startup benefits and other income tax and other benefits. I welcome wholeheartedly Mridhul Agrawal. Welcome you, sir.
Thank you, sir. It's a privilege being here.
I think lot of members are keen on working this sector, but very few members they know what is in and about the startups. There is lot of opportunity. Hope Mridhul Agrawal is going to tell us what are the opportunities and ways to get the benefits and certifications. It will be helpful our members to practice in that area. It's not much explored area of practice. With this, I once again welcome you all for this very interesting workshop study circle on startup. I request our secretary to give a brief introduction of our today's speaker, Mr. Agrawal. Over to MC, secretary.
Thank you, Chairman, for the welcome address. So I would like to take the privilege of introducing today's speaker, Mr. Mridhul Agrawal. He is a chartered accountant, lawyer, MCOM graduate by qualification. He has worked with BMR Advisors and Deloitte. He currently runs his own firm in Bangalore. Having worked in the financial services and consulting industry, he is also a corporate trainer who loves public speaking and has been invited by many management institutions, companies, and professional bodies to address the seminars and sessions across the countries. Today, I would like to hand over this session to Mr. Mridhul Agrawal so that he can throw us the light on the seminar on the startup benefits and the MSME benefits, which is available to everyone. Over to you.
A very warm welcome to all the members and dignitaries present in the meeting. I would like to firstly thank the Bangalore branch of ICI for having invited me here to conduct this session. I would also like to personally thank CA Srinivas sir, the chairman, and the secretary, CA Pramod Hegde, for having graciously introducing me to all of you. So today's topic, as has been told, is on startups. The benefits. What is a startup basically? What are the benefits available if you register as a startup under the Income Tax Act, and even other benefits in general if you are registered as a startup with the government. And also, I will be throwing a little light on how members in the fraternity can use this particular area to build on their practice even further. So without any further delays, I'll just quickly share my screen. I just hope my screen is visible. Right. So we are here live from the startup capital of India, as it is popularly called. Some of us may probably want to, dispute that fact, but Bangalore does remain and happens to be the startup capital in India, and it's a privilege to be conducting this particular session from this city, and it adds a lot more value being over here. Now, all of you, especially the chartered accountants in the country today, are are hearing a lot about startups, unicorns especially, etc., etc., etc. Startups are becoming very, very big. Indian startups are going global. They are attracting funds to the tune of billions of dollars and other such complicated terms. Now, given all of this buzz surrounding startups, it becomes imperative for us to understand what exactly startups are, and why is there so much brouhaha surrounding this particular concept of startups. Well, to a layman, a startup is just a small entity which has just been recently started by any young entrepreneur, or anybody, any entrepreneur for that matter. And it's not restricted to any particular particular sector or segment as such. It's simple. If you are a person who has just started off his own business, it will be called as a startup. And in a country like India, where the focus was always on getting more jobs. I think over the last decade and a half, I think there's been a lot more focus on creating jobs rather than just getting jobs as such. And the so-called startup culture, as it's called, has grown in immense popularity over the last 10 years or so, and quite quite rightly so, because it is estimated that almost 80 to 90% of all businesses in India are so-called startups in the layman terms. Now, given that fact, the government is also very, very keen on promoting this startup culture. It is very, very keen on promoting entrepreneurs to start up on their own, to start their own ventures, and to become job creators rather than just job seekers. And with that thing in mind, the government has launched a lot of schemes, you know, uh, and also financing opportunities for startups, so that entrepreneurs need not scrounge around for the much needed finance. And keeping with the Atmanirbhar Bharat and the vocal for local scheme of the current government, a lot of emphasis has now been placed on, developing the startup culture in the country and ensuring that the manufacturing base shifts to India. Now, what is a startup? As I've already said, startups are nothing but young companies founded by entrepreneurs, and entrepreneurs do not know any age. It can be very young. They can be just young people who are just out of college, or they can even be 80 or 90-year-old people who can found a company on their own. In fact, the age of entrepreneurs has only been getting younger over and over the years, with few advertisements of a few companies, promoting entrepreneurship right from the time kids turn 4 or 5 years old. So there's actually no age for entrepreneurship. And given that fact, India, with its demographic dividend and such a large young population, the growth of startups is only going to be booming in the days to come, and therein lies a very, very big opportunity for us chartered accountants as professionals. Well, this is the layman definition of what a startup is. Basically, any company or any business started by an entrepreneur. Well, what are the benefits of running your own company or running your own startup? They are very, very different from the big MNCs. Startups are much smaller in structure. They are very simple in structure. They are not as complicated as the big MNCs. Given that fact, they bring in a lot of efficiency, cost effectiveness in the way they work. There's a great team culture. I happen to be working with some really, really young startup entrepreneurs, and they don't come to office wearing formals, ties, and business suits. They come to office wearing shorts and t-shirts. They don't care about having a haircut, or they don't even care about getting themselves a big shave. So the culture there is really, really open, and anybody with a great idea can just jump onto the startup bandwagon. And the biggest advantage which startups bring on board is the versatility and the personalization aspect. Because they are small, they are able to cater to the individual needs of their customers, offering them customized solutions. And the tolerance for mistakes is also very, very low over here, because what if they make mistakes? They adapt pretty quickly. Now, what are the benefits available to startups from the government of India? Now, the moment we talk about startups, like the entire idea goes to young companies, etc., etc. Well, is there a definition to what startups are? Has the government officially recognized startups as a separate category of companies? Is there any eligibility criteria for you to be recognized as a startup? Well, prior to 2016, you had no such definition. But post 2016, I think the government came up with a very, very radical initiative, a revolutionary initiative in the country. And I guess most of you would have guessed by now which scheme I am talking about. Any guesses? Yes, absolutely. It is the Startup India scheme, which is the go-to scheme for any company which wants to be registered as a startup in the country. Well, what is it? It's the flagship initiative of the government of India. Now, what's the main objective behind launching the Startup India initiative? We never had this earlier, so why now? It's pretty simple. The next decade or 2 decades, or maybe three, four, or maybe the next many, many years to come is going to be India's years. India is going to be the fulcrum of economic activity across the world. Obviously, because of its demographic dividend, we have a large population, and we have the second largest population in the world. Soon, we will be the largest, given the trends which researchers predict. And the biggest fact about our population is that they are young, and young people by nature are very restless, and they always want to do something really, really creative and innovative. So the propensity for them to start up on their own, rather than working under somebody, is going to increase even more. And therefore, this initiative of the government is primed at targeting those people who want to start up something on their own. The government basically wants to create a really, really strong ecosystem for nurturing innovation and driving sustainable economic growth in the country, and at the same time generate the much needed large scale economic employment opportunities for people out there, which currently is increasing, but it's increasing at a very slow pace. The government would want to increase that at a much faster pace. So what's the action plan of this particular scheme? It's very simple. Simplify the process of registration, handhold entrepreneurs who have no idea how to start up on their own, ensure seamless participation or seamless integration between entrepreneurs, the industry, and academia, increase participation, and also provide funding support along with mentoring initiatives for young startups or for young entrepreneurs. Now, what's generally noticed is that many entrepreneurs are very lost. They are just out of school, college, and that's the large proportion of entrepreneurs out there. They're pretty lost, pretty confused with respect to the laws in the country, how to start a business. They are just focused on creating a big MVP, as it's called, a minimum viable product. They are only focused on creating that MVP, but they have absolutely no clue how to scale up their business, who to target, how to get the required funding, and a whole host of other questions, especially related to the regulatory framework. And therein, the government would want to bridge the gap, the knowledge gap, the funding gap, the connection with investor gap. And that's where Startup India as a scheme is going to play, or rather has already started playing, a very, very big role in the country today. Just a few key statistics for those who are interested. We are chartered accountants, always interested in numbers. Uh, till date, I think Startup India scheme was launched in the year 2016 by our Honorable Prime Minister Narendra Modi, and in the last 5 years or so, there have been close to 41,000 startups who have been recognized by DPIIT. which is the nodal body which regulates the Startup India scheme. There has been around 5 lakh jobs generated by over 39,000 plus startups. Uh, the government has set up a 10,000 crore fund of funds scheme, and this scheme is entirely driven to provide funding to eligible startups. And till date, I think till December 2020, the government has funded close to 4,500 crores of to startups. 590 plus districts in the country have at least one recognized startup. 44% of all the startups registered with the Startup India scheme have at least one woman director. And now that's a huge encouragement and fillip to women entrepreneurship in the country. 30 states and union territories in the country have a dedicated startup policy. That's the kind of change this particular scheme has brought about in the country. And going forward, I'm sure there's going to be even more change in the in that particular direction. Few more statistics. 319 startups have been granted exemption under the Income Tax Act. We'll be covering that in some time. Almost 53,000 orders have been received by startups worth over 2,200 crores through the GEM portal. That's the government e-marketplace portal, which I'll again be talking about in some time. 37 plus regulatory reforms have been undertaken by states and union territories alike, few of them being the IBC, the GST laws introduction, so on and so forth. Few more regulatory reforms have been taken, and 2.8 lakh users registered under the Startup India Learning and Development Program. So all in all, the idea behind showing you these statistics was to prove that we are heading in the right direction. It's not very far that India, will slowly and slow. India, I think, is the third or the fourth largest startup hub in the world in terms of the number of unicorns, etc. And slowly it will overtake China, and that day is not far when we will even overtake the market leader, which is the United States of America. Currently, we are definitely headed in that direction, and there is great potential for startups or the startup culture to grow in the country. Now, coming to a very pertinent question: what exactly is a startup? And am I interested in knowing the layman definition of the term? Well, not exactly. I think we need to go a step further and understand what the government basically means by a startup, and that definition is definitely being provided over here. There are, I think, 5 parameters which needs to be fulfilled to be recognized as a startup. Firstly, you should be in existence for not more than 10 years since the date of incorporation. You need to be registered or incorporated as a private limited company or a registered partnership firm or an LLP. Sole proprietorship, HUF, AOP, BOI, any other form of organization cannot be recognized as a startup as per the government. Annual turnover should not exceed rupees 100 crore for any of the financial years since its incorporation. The idea being, if you have more than 100 crores of turnover, you are well within your capacity to finance yourself, and you don't need government funding at all. You need to be an original entity. So the government here basically means that you cannot, amalgamate with some other company and be recognized as a startup. You cannot subdivide your shares, become another entity, or, merge with another entity and be recognized as a startup. You need to be a new entity only, an original entity. The idea being promote innovation, promote more and more original thinking. And obviously, the main idea and the main thrust of the definition is that you need to have an innovative idea. Well, not just innovative. Every person has ideas. They are flooded with hundreds of ideas. I have hundreds of ideas, but I feel it's innovative. But there are people in the country who don't, and I will not be able to scale my business. So the important term here is scalable. You need to have an idea which is innovative and which is scalable, meaning you can take it pan India, not just pan India, but maybe take it across the globe and make it really viable, help in wealth creation, not just wealth creation, generate employment across the country. That's what the thrust of the definition is. You need to have an idea which is innovative and scalable. So these are a few parameters which are actually required for you to be eligible to get registered under the Startup India scheme. Now, what are the benefits available for getting registered under the Startup India scheme? We will be covering these benefits in greater detail, but firstly, I've just summarized this over here, and then moving on, I will be talking about how much of the benefits have been availed as and when we go. So I have a question here. Will I be taking that towards the end? But I will be question answer. I'll be taking it towards the end. Last 10-15 minutes, if that's okay with all the participants. And for all my guests who are coming in online, you can always put up your questions on the chat window. If I feel it's appropriate at that time, I will definitely address them. Else, I will take it up towards the end. Now, the structure of the presentation is like this. I'll be summarizing the key benefits under the Startup India scheme, and then later on, I will be telling you in greater detail as to how many startups have availed these benefits, what are the key action indicators, and how much of a change has actually been seen on the ground with respect to this particular scheme. And this scheme is going to be the thrust of my presentation today, and I'll generally be telling you how chartered accountants will be able to take benefit and practice in this particular area. Now, benefits for startups under this particular scheme, you have a system of something called as self-certification, wherein you as an entity are allowed to self-certify your compliances under 3 environmental laws and 6 labor laws. I cover this in greater detail a little ahead. The most important thing for any startup with a really, really innovative idea is how to protect that idea. Well, there is no dearth of innovative ideas, but at the same time, there is no dearth of people who are more than ready and willing to copy that idea of yours. And if that happens, obviously, there is no incentive for anybody to even run a startup, because the entire thrust of the Startup India scheme is innovation and scalability. So, to promote and to help startups protect their innovative ideas, any DPIIT recognized startup only has to pay, there's a very discounted rate on patents, on registration of patents, trademarks, their copyrights, their designs, and also getting a patent application registered for startups you generally takes a lot of time. But if you're registered under the Startup India scheme, there's a fast track application process for that. Also, there are easier public procurement norms for a DPIIT recognized startup. The government has launched a new portal called as the GEM portal, or the government e-marketplace portal. If you're a recognized startup, you get access to the GEM portal. In fact, GEM portal is accessible to a registered business only, and you can have access to purchases. You can have access to products from across the country and from other MSMEs and other startups who are selling it at much more reduced rates. Moving on. Easy winding up of the company. Well, the government in the year 2016 launched something known as the Insolvency and the Bankruptcy Code, which provides for a fast track way for a company to shut its business, to shut shop in case things don't work out. Prior to the IBC, the entire system of insolvency and bankruptcy was a big mess. But after IBC and its introduction, the system has become way more organized, way more faster, and that's a great practice area for fellow chartered accountants. but uh, especially for startups, and this is good news, the government has set up something called as a fund of funds worth 10,000 crores. So if you remember, I had said that the government has funded many startups to the tune of around 4,500 crores. And this funding has come in from the fund of funds itself. A 10,000 crore uh, big huge fund, and that is dedicatedly for funding only startups. That's not all. In addition, the government also has something called as the Credit Guarantee Fund, wherein the startups can avail of around 2,000 crores. They get access to 2,000 crores worth of credit through the National Credit Guarantee Trust Company, or SIDBI, over 4 years of time. We are all chartered accountants, so we can't stay away from discussing more about income taxes. And quite rightly, the income tax, or rather the Startup India scheme, gives a whole host of income tax benefits to registered and recognized startups. A few of the benefits being tax exemption under Section 80 IAC. Also, the startups tend to get an exemption from paying something called as angel tax, which became a really cursed word in the Indian startup industry a couple of years back. But that particular scheme enables you to get an exemption from this. And also startups can get investments from other people, and the people who invest will be entitled to get certain benefits from the capital gains on having invested into the startup area, which obviously I will be dealing in some more time, primarily Section 54 EE. Now, moving on to a more detailed discussion on each of the benefits available. Now, the first and foremost benefit of registering as a startup under the Startup India scheme is, on the compliance front, or it's based on something called as the self-certification system, wherein the objective is to reduce the regulatory burden on startups by allowing them to focus on their core business area and to get them as little stress as possible when it comes to compliances, laws, complicated labor laws, etc. Now, what are the benefits available? Self-certification. You don't need an audit. You don't need anything else. As long as you're doing the self-certification bit under 3 environmental laws and 6 labor laws, you're done. You don't have any, or you have very little departmental intervention. Few of the indicative labor laws being the PF, the ESI Act, Gratuity Act, so on and so forth. Now, what has been the outcome of this? What the outcome has been immense. You've had 15 states which have already complied with the self-certification advisory in the last 5 years. And mind you, India is a democratic country with a federal structure. Every state is free to follow its own rules, especially when it comes to, getting revenue and all of that stuff. But 15 states have already complied with the self-certification advisory, which goes on to show that this particular benefit under the Startup India scheme has been well received. 12 states have already complied with this advisory for 3 years. 9 states have integrated their portals with Shram Suvidha portal. Now, what is the Shram Suvidha portal? For all of you who especially practice in the area of labor laws, you will know that PF department has a separate website, ESI has a separate website, so on and so forth. And it's a big confusion for not just SSCs, but even chartered accountants alike. I personally have not graded labor laws. I'm being very honest here. That's not my core area of expertise. But few of the states have merged all of their labor laws and have launched just one website for all your labor law clearances, and that's the Shram Suvidha portal. Unfortunately, Karnataka is not one amongst them. You have 169 startups who have already availed these benefits of self-certifications, and 36 white industry sectors have already been identified for availing these sort of benefits. So all in all, a great move to have self-certification of, startups. Next action point, the government proposed to set up a Startup India hub, and the objective was pretty simple. It was to create a single platform for engagement of the of the various startup ecosystem stakeholders. Bring together thinkers, people from the academia, entrepreneurs, venture capital firms, incubation centers, and various experts and mentors onto one platform, and that platform has already been set up in the form of the Startup India website. There are 4 lakh users on the Startup India online website already. Now, obviously, that number will increase in the coming days with a renewed vigor, especially after the COVID scenario, with people realizing the importance of becoming self-sufficient. Because in an era when things are really uncertain, they really feel that doing something on our own will bring that sort of stability in their lives. The Startup India online hub, it can connect you to 663 incubators and 165 accelerators for scaling up your business. Now that is a big pool of, it's a gold mine of information. And for chartered accountants, especially, if you can somehow get associated with these incubators or these accelerators, you can target providing services uh, to startups. For example, pitch deck preparations, you can offer them valuation support, you can offer them fundraising, equity fundraising support, you can offer them CFO related services, you can do their audits, their tax advisory, their accounts outsourcing, and a whole lot of other services which can be provided by chartered accountants if you were to just get connected to these incubators and accelerators. Also, the government has launched around 446 innovation hunt programs already in collaboration with various government departments, and they have received more than 27,000 applications from startups. So indeed, this Startup India hub as a whole is working its wonders. Next, rolling out of a mobile app and portal. I think this is the most easiest and the most talked about thing. The Startup India portal, which is there, is something which the government launched pretty early on. And in my opinion, in my personal opinion, it's a very robust website with very few technical glitches, unless the government again decides to change it like the income tax or the GST portal. But thankfully, the portal works pretty seamlessly, and I personally haven't encountered too many glitches on the website. So, in my opinion, it's a job well done. But jokes apart, I think it's a really great single platform for all startups to interact with the government and all regulatory institutions for all of their business needs. There are over 11,000 active users daily, and if you were to accumulate that since the start, it amounts to 2.6 crore website visits since inception. And that is a huge number. Now, which is the department responsible for promoting this particular website or this particular scheme? Well, it's the Department for Promotion of Industry and Internal Trade, or DPIIT for short. This website also has over 4 lakh registered users. So you need not be a registered startup to use this website. You can still create a login ID and password, provided you're a private limited entity or a partnership firm or an LLP. Moving on, this website has a lot of learning and development programs, access to incubators, mentor support, funding, incubation, accelerator support, etc. So it and there's also a mobile application which comes along with this scheme, which can be downloaded by most people for their use. Next action point: legal support and fast tracking of patent examination. Like I said earlier, the main objective for any startup today is obviously to be innovative, but you can only be innovative if you have the incentive to be innovative. And the biggest disincentive for being innovative is someone else coming and copying your idea. And you've thought of a great product idea today. 2 days later, one of your employees has just gone out and discussed that idea with someone else, and that idea is now being copied by many people. Now that is definitely a big disincentive for innovation. So what do you do to protect your idea? It's simple. You get a patent. Well, getting a patent in other countries like the US or Geneva or Singapore is pretty simple and straightforward. And also, you get that uh, at a very low cost. But at the same time, it holds a lot of value because they can be enforced much faster and in a much better manner in the international courts. Can I say the same thing about the Indian patent rights? Well, unfortunately, no. There are many startups, and personally, I've interacted with a lot of patent lawyers, patent attorneys, not just from India but across the world, and they say that the Indian patents, it's a good, it's a good thing that India has a good judicial system, and the patent is granted faster, but the attractiveness of getting a patent in India is slowly getting reduced. It's not increasing at all because of the slow pace, the bureaucratic nature, and most of all, most of all, the the fact that you can't enforce your rights in the judiciary in a much better manner when compared to international courts. So to promote awareness and adoption of IPRs, that's intellectual property rights, whether it's patents or copyrights or anything else, the government has decided to give, and one of the key features of this program is to offer legal support and fast track the patent examination process so that startups and entrepreneurs are not hassled, especially regarding protecting their innovative ideas. Now, the ministry again, which promotes this, is the DPIIT. What's the outcome? Over 5,000 patent applications have already been filed since inception. 1,200 approx patent applications have already been filed for expedited examination by startups, and 884 applications have already been examined, and 459 patents have already been granted since inception. That is a very fast and a landmark progress, especially in a country like India, where things at the government level for any of us is too slow for our comfort. Even for us chartered accountants, sometimes we get really bored and we get really frustrated seeing how slow the departments work, especially us youngsters. So the faster the process, easier, the lesser would be the stress, and ease of doing business would increase. Another statistic, around 12,000 odd trademark applications have already been filed by registered startups. 510 patents and design facilitators and 392 trademark facilitators are empaneled under the scheme, which means if you are a patent lawyer or you are an expert with patents or designs or trademarks, you can get registered under this particular scheme. So that again is a great area of practice for fellow chartered accountants. Next, relax norms for public procurement. What's the main objective? To provide an equal platform to startups, especially in the manufacturing sector, to make procurements, faster procurements. And the ministry under which this entire scheme is being launched is the MSME ministry. Uh, Almost 53,000 orders have been placed to startups worth more than 2,300 crores approx. And the portal that I'm talking about is the GEM portal or the government e-marketplace, as it's popularly called, wherein if you are a recognized startup, you can get registered and you can sell your products or services on that particular platform. Now, there are a host of other benefits which have been given there. There's an exemption from submission of EMD or earnest money deposit bids. There's also a relaxation of conditions like a prior turnover or a prior experience requirement from the DPIIT. Especially when you go for government tenders, you're supposed to meet certain eligibility criteria. You have to give earnest money deposits, you're supposed to have a minimum amount of turnover, net worth, so on and so forth. But no such requirements for registering on the GEM portal. So this portal is a very, very revolutionary kind of a thing, which gives which helps entrepreneurs to scale their business to greater levels. The next benefit for startups is obviously faster exits. Now, from what I can remember, closing of companies was never an easy business. You know, you may correct me if I'm wrong. It's estimated that almost 80 to 90% of the startups fail. They don't, and maybe that number is a little higher. Please do correct me with the right numbers. There's no right estimation for that, but approximately they fall in the range of 80 to 90%, maybe even more. They fail. So every day, someone's going to start a business, and the chance of them not being successful or them not being able to raise the next round of funding or maybe raise any round of funding for that matter is very, very high. And because of that, there's a very high chance that they are going to fail. Hey, but suppose you're registered as a company and you're not doing business, you still have to get yourself audited. You still have to get regulatory compliances done. You still have to file your forms, which again, is a little costly affair considering the fact that you're not doing any business. And quite honestly speaking, few of my clients who are recognized as startups have absolutely no business. The turnover is negligible, they are only making losses, and they're planning to shut down their companies. But the biggest thing is, why do I need to pay you your audit fees? Your audit fees is just too high. Why should I pay you for filing your forms? Why should I even file those forms when I'm doing business? I'm always at pains to explain to them that this is the law as of now and you have to comply with it. So they say, why don't you opt for shutdown of company? And the moment they say that, I shudder. I say, hey, are you sure you want to shut down your company? What if you again have another idea? Why not just change the objectives and start running that idea into this particular business? Because shutdown of a company is not very, very easy in the country. So to make it easier for startups to wind up their business operations, the government obviously launched something called as the Insolvency and Bankruptcy Code 2016, which was a landmark law, which brought all insolvency cases, all bankruptcy related cases under one regulatory framework. And this code has genuinely increased and improved the business climate in the country, wherein it's become easier for entrepreneurs to get the kind of support that they need to turn around their business. Earlier, if let's say an entrepreneur defaulted on his loan or something else, he would just wind up his business, shut shop, and go home. But today, he has a genuine chance to resurrect his business through the CIRP process that's defined in the law itself. And if you still are not able to resurrect your business, the end result is liquidation or winding up. So the government is giving you an equal platform, an equal chance to come back into the game. If you're not the right person to run the business, someone will come in and help you run the business and maybe even become successful, So in case you're not able to do that, well, shut down. But there is a certain defined timeline. So the entire insolvency resolution process takes 180 days. from the date of filing an application before the NCLT, which should be completed within a maximum period of 330 days. That's the outer time limit. And also, an insolvency professional needs to be appointed who can assist you in the entire CIRP process. Now, that is a great area of practice for fellow chartered accountants. In fact, for any chartered accountant who's looking to venture into a new field, my personal suggestion would be the IBC, the Insolvency and Bankruptcy Code, because this particular scheme or this particular law has great potential, and there are very few people in the country who are qualified to be insolvency professionals. Next, providing funding support. And I think this is one of the most popular benefits being provided to startups via the Startup India scheme, wherein the government has set up a fund of funds with a corpus of close to 10,000 crore rupees. Obviously, the objective is to provide funding support to startup. Any entrepreneur today that I speak to is looking at like, hey, I want to be the next unicorn. I want to get that next $1 billion round. I want to become like X. I want to become like Y. I really want to grow big. But the biggest hindrance to that is the lack of, success. There's a very high failure rate in the startup sector. Only question is, they don't know where to go. They don't know whom to approach. Private equity funders, venture capital firms are out of reach for many young entrepreneurs. And if that's the case with private equity players, you can only imagine the kind of demand for funding that's out there, and also the slow supply line of funds. That's why you have a very high failure rate in the country. 80 to 90% close to 4,500 crores worth of investments in, I think, around 300, 400 odd startups. So if you really feel you have an innovative idea and you feel that it's scalable, then you should definitely consider applying under the Startup India scheme and apply to the fund of funds. Make a pitch. One of the documents you require to get registered under the Startup India scheme is a pitch deck. You need to upload your pitch video as well, which I will tell you in some time. You need to upload that. And you also need to make a separate application to the fund of funds. If you are not, really well versed with it, I think the chartered accountants can help them, because they obviously are great financial masters. And if you can just, play around with the website, just gather some knowledge, I think that's a great value addition that you can provide to your clients. Next, the fund of funds worth 10,000 crore is not the only kind of funding support which the government provides to startups. There's also something called as a credit guarantee fund, or with a corpus of around 2,000 crore rupees, which have been set aside to to help startups, especially with their funding requirements. And obviously, this is being promoted by the DPIIT and SIDBI. Uh, the proposed target for coverage of this guarantee scheme is around 15,000 crores for 3,000 units, with an average loan size of around 5 crore rupees to the eligible borrower. So let's say you're a borrower and you've gone to a bank to take a loan. The government is going to stand as a guarantor in case you default in the future. The next, and this is obviously something which the chartered accountants would be very interested in, those are the tax benefits under the income tax law. What are the benefits which the Startup India scheme provides to registered startups? And this is again a very big area of practice for fellow chartered accountants. The first and foremost is the tax exemption on capital gains. The idea obviously is to promote investments into startups by mobilizing capital gains arising from the sale of capital assets. Now, there are two sections. First one being Section 54 EE in the Income Tax Act, which gives an exemption from any LTCG, and if this LTCG, if suppose you're an investor and you have an LTCG up to 50 lakh, and you can claim an exemption on this particular investment, on this particular capital gain, by investing up to 50 lakh into an eligible startup. That's under 54 EE. Another exemption is under 54 GB, wherein any consideration or any capital gain arising from a sale of residential house can now be invested into not just another residential house, but also into an eligible startup, which allows you to again, get that sort of an exemption from capital gains tax. The idea again is to encourage investors to put in their money into these eligible startups. That's another indirect way of helping pool more funds for eligible startups. The next and probably the most popular tax exemption for startups is under Section 80 IAC. That's a very, very popular income tax exemption tool for many, many startups. So what's the idea? Obviously, it's to promote the growth of startups and to address their working capital requirements. Imagine you're a startup, you're making profits, and a big chunk of your profits goes towards paying taxes. Now, obviously, paying taxes are duty, but at the end of the day, who wants to pay taxes? Am I correct? So, for example, the cryptocurrency rules have now come in. You have to pay a flat 30% tax on that, without the benefit of set off and all the other rules. Who wants to pay taxes? So the government knows this and therefore has given that sort of a benefit to is my screen visible to the participants?
Sir.
Okay. Right. Thank you for that confirmation. Now, tax exemption to startup for 3 years. Obviously, idea is to promote the growth of startups and address working capital requirements. Now, what does Section 80 IAC talk about? If you are a registered startup, if you're an eligible startup, you can claim 100% exemption from your profits for 3 consecutive assessment years. Since inception for the next 10 years. Yeah, I mean, in the first 10 years, any block of 3 years, you can claim an exemption from your profits, and the exemption available is for 100% of the profits or gains derived from your eligible business. Now, around 320 startups have already been granted income tax exemptions. This data is till November 2020. Obviously, the number of startups would have increased over the last 2.5 years, and obviously the date for exemption has now been extended up to 1st April 2023 by the Union Budget 2022. One small point of addition over here: there is a general misconception amongst startups that if you apply for a startup registration certificate with the DPIIT, you can directly claim an exemption under the income tax laws. That's a big misconception. You can't. There's a separate process by which you need to make a separate application to the income tax department for getting that exemption. And that, my friends, is not as straightforward and simple as getting the DPIIT certificate. In one of our client cases, we had to wait for close to 2 to 3 months to get the exemption certificate under Section 80 IAC, and that turned out to be, it's the fastest. So one sir is here saying that 2 to 3 months is one of the fastest that he has heard of. Maybe what's your experience been like?
I'm not apply that, but what I've heard from the full, those chartered accountants takes years, 6 months, 1 year.
6 months to 1 year is the average timeline, but I don't know, you can call it luck or you can call it whatever. We were fortunate enough to get the exemption certificate in 2 to 3 months' time. And I think that timeline has consciously been reduced over the years. And I think 3 to 4 months is a standard timeline for getting the exemption certificate under ATIAC from the department. But yes, if you are someone who didn't know that till now, I think that's a great practice area. The thing of advising clients to get registered under startups under the Startup India scheme, and also getting getting income tax exemption certificate under Section 80 IAC. There are close to there are 20,000, 25,000 odd startups which have been registered, but income tax exemption certificates have been granted only to 320 odd startups till November 2020. So that speaks volumes of the complexity of the process. It's not easy. So if you're someone who is really good with the department and really good with the processes, it's a great practice area, for chartered accountants. Also, tax exemption on investments above the fair market value, or also popularly called as the angel tax. The moment anyone talks about angel tax, it becomes a really, really draconian thing to talk about. And what's the angel tax basically? Well, it's not very complex, but if you are a startup which, let's say, receives any consideration for the issue of shares above the fair market value, then on the value above the FMV, you need to pay a tax. And that tax happens to be the angel tax, as it is popularly called, which is levied under Section 56, subsection 2, clause 7B of the Income Tax Act. Well, good news for startups is that if you are a registered and a recognized startup under the DPIIT, you can get an exemption from the angel tax also. So these were few of the most popular income tax benefits for startups under the income tax laws, and close to around 3,400 startups have already claimed the benefit from the angel tax listing as on December 2020. For that, you need to file a form 2, and there's a separate process altogether which needs to be adhered to. The next benefit for startups is obviously the fact that Startup India provides a collaboration platform. It's a big platform which brings together investors, mentors, academia, people from various industries. The experts are brought in, and it serves as a great platform for not just showcasing your business ideas, but also getting help if you are looking to scale up your business. And if you really want to galvanize the startup ecosystem in the country, you need a platform like this. And under the DPIIT, the Startup India scheme as such has organized various summits. Especially the Startup India Global Venture Capital Summit was organized in the prior years, wherein hundreds of delegates from across the investor community, not just from India, but across other countries also participated. And there were 12 great challenges which were, held, either organized by the DPIIT. The startups could participate in that. And if you won it, you could get a certain amount of funding. Now, from a more personal perspective, there is great investor interest in Indian startups. Great investor interest, especially from investors in the Gulf countries, the Southeast Asian nations, the European markets. They are gung ho about investments, about Indian startup scene. and they are just looking for opportunities to invest in India. Because I personally work with a few investors from the Gulf countries, and they have invested across many, many sunrise sectors like renewables, like the tech sectors, ed tech, agri-tech, so on and so forth. Now, with a scheme, with a common platform like Startup India, it provides them that one place wherein they can just come in and get access to those kind of innovative startups. And that again is a great area of practice for chartered accountants. So if you can, get access to this sort of a pool, this sort of investor community, I think your practice will see a quantum leap. The next benefit, obviously, is the launch of certain programs for for development of the spirit of entrepreneurship, and the government launched something called as the Atal Innovation Mission, AIM, as it's popularly called, along with the self-employment and talent utilization, that's the C2 programs. It basically serves as a platform for the promotion of world-class innovation hubs, and almost 15,000 schools across the country have been selected, for this particular program, of which around 5,000 odd schools have received grants of rupees 12 lakh each. Now, if you go to rural areas, 12 lakhs is a big amount of money, especially to promote entrepreneurship only amongst its students. The next benefit, obviously, is to harness private sector expertise for setting up incubators across the country. Now, the government has launched a scheme known as the Atal Innovation Mission, under which 86 incubators across the countries have been selected to provide financial support through different grants, through different funding programs, and they have provided almost 200 crores of money to these 86 incubators till date. Almost 1,250 startups have been incubated at these Atal incubation centers, or AICs. Now, obviously, these incubation centers have a requirement for chartered accountants, for experts across industry domains, not just from finance, but from legal, from secretarial, from science, from commerce to management experts, and many more. And this is a great opportunity for chartered accountants. If you can enlist or empanel yourself with these Atal incubation centers, and you will get a constant supply line of startups too. You can act as mentors. You can provide your expertise in areas like finance, tax, financial services, accounting, so on and so forth. And these Atal innovation or Atal incubation centers have been very pivotal in creating more than 14,000 jobs across the country. They have onboarded more than 1,000 mentors, 2,200 plus events, 700 plus trainings. I can go on and on with these statistics, but in summary, in summary, this particular scheme has just revolutionized the system of incubation across the country. And if we chartered accountants can even find or get empaneled with a couple of these incubation centers, then we get great access to not just entrepreneurs, but also other mentors from whom there can be great knowledge sharing. The next benefit, obviously, is building innovation at national institutes. The government has supported close to 11 technology business incubators across the country. It has also set up 7 research parks. Successful innovation and uh, Kanpur, Gandhinagar, and they have been able to get funding close to 350 crore rupees. And there are 48 incubators across the country focusing only and only particular sector. Moving on. People who have experience in setting up businesses. Government wants to catch entrepreneurs young. Like I said earlier, the age of entrepreneurs is reducing by the day, with people learning to code at the age of just 5 or 6 years. I'm not going to name which company, but I'm sure the age of entrepreneurs will definitely go down even further. And the government wants to catch them young, and through schemes like the UAI 1 and the UAI 2 schemes, the government goes out in search of entrepreneurs in different schools and colleges across the country. And the idea is to scout and support students, especially in the age group of 10 to 15 years, so that they have great innovation and creativity at that age. If you catch them young, you never know, you might just have the next unicorn from one of those youngsters. Almost around 50,000 ideas have been shortlisted. 3.2 lakh nominations have been received from schools, and each one of them, whoever has won it, has got an award of rupees 10,000 each. And probably we are nearing the end of the action points or the benefits under the Startup India scheme. The government also launched something called as the annual incubator grant challenge exercise, wherein the idea was to create world-class incubators across the country. Now, some of you may ask me the question, what is an incubator? What exactly is an incubator? If you
Try to practice to validate the idea, provide them the atmosphere, where mentors, uh, the other professionals are at one place.
Absolutely right. So incubators are nothing but an ecosystem, an environment where entrepreneurs can meet and interact with some of the best minds from the industry. They can be venture capital firms, they can be mentors, they can be industry experts, they can be fellow professionals, or maybe just a diverse set of entrepreneurs where you can all meet in one place, have a healthy exchange of ideas. Now, the the incubator scene in India was not very developed. It was not a very mature market for incubators in the country. There was still a lot of lacuna when it came to setting up incubators in the country. You may have had many people doing providing incubation as a service, but we did not have recognized centers of incubation pre 2016. You had very few, but post 2016, there has been a conscious and concentrated effort to improve and to bring about a sea change in the way incubators are set up and the way incubators are run across the country. An incubator grand challenge exercise was announced, wherein potential incubators could come and participate and get ideas, and if you got selected, you got grant and aid as funding support, and close to 55 crores has already been distributed to among 9 incubators till date, and more amount of funding support is in the pipeline for such incubators. And I must admit at a personal level that I've personally had the privilege of interacting with few of the people from Atal incubation centers, and they have been very, very forthright in saying that this particular scheme of the Startup India scheme has been really, really pivotal in the way incubators are running and functioning across the country. We are soon on par to to match developed and more mature countries like the United States or the United Kingdom or the Germany or China as well. Now, these were a few of the benefits which startups could get under the Startup India scheme. Now, for those of you who may have a question, hey, you've all spoken about high level stuff. How do we register with Startup India? If there are people logging into this webinar and some of you don't know how to register, well, you can just follow the subsequent slides, which for few people here may be really, really easy. But in case you don't, here we go. You just need to log into this particular website of the Startup India. You can just type startupindia.gov.in on Google, login, and you can create a login ID for yourself. You can register yourself on this website. What do you need to enter? Just the entity details. Like I said earlier, you can only register on this portal provided you're a private limited entity, an LLP, or a registered partnership firm. You need to provide full address of the entity, details of your authorized representative, your directors, etc., whether you have any IPR already, and whether you have already been funded or even been recognized by some other entity. The documentary requirements, you need to submit your incorporation documents like the MOA, AOA, the certificate of incorporation. You need to submit financial statements and income tax returns for the last 3 years or from the year of incorporation. You also need to submit something called as a startup video link and a pitch deck. Now, what generally happens is that many startups do not know how to register on the startup portal. They do not know how to get the registration done. And when you actually go deeper, it looks pretty simple. But many startups wouldn't have created a pitch deck, they wouldn't have their audited financials or even the projected financials for that matter. So that's wherein we chartered accountants come in. If we can diversify our practice areas to, let's say, preparation of pitch decks, I think there is great and immense potential for us chartered accountants, because every pitch deck does not get you funding. It's only those few set of pitch decks which do. You need to be able to make the right kind of impact in the investor's mind. And if you have a little bent, if you have a little creative bent of mind, people say we chartered accountants lack that because we spend years and years looking at our books. But if we do, we definitely can make a mark, especially by offering services related to pitch deck preparation. And this is how pretty much a certificate of recognition looks. Moving on, this was about startups and especially the Startup India scheme. And to be very honest with you, this is the only and the foremost scheme for startups available in the country. You know, a one-stop shop for all the startup benefits that you ever wanted, you know, and this has brought about a radical change, an organized change for startups, one platform. But having said that, is this the only scheme available? Well, no. The government of India does have other schemes as well for the benefit of not just startups, but also other MSMEs. That's the micro, small, and medium category of entities. And many startups also fall in this category of MSME. So I just have a small bit on what are the other schemes available for the benefit of MSMEs and startups from the government. Now, obviously, there are many schemes available, but I think There's a little paucity of time today, but I've tried my best to, cover some of the most popular schemes and, some of the easily available schemes out there for startups and MSMEs. Well, quite frankly, if you really, really need to be recognized as an MSME, you need to take something called as the Udyam registration, or it's also popularly called as Udyam Aadhar. Earlier, it was called as Udyog Aadhar. Now, obviously, the registration process is very simple, it's very straightforward, and it's inexpensive. It doesn't cost you at all to get an MSME or a Udyam registration. So if anyone asks you, any of your clients asks you, hey, I need an MSME registration, they are primarily referring to the Udyam registration itself, and it's a pretty simple and straightforward process. Now, who is qualified to get registered under Udyam? Well, no restrictions as such, whether you're a proprietorship or an LLP or a partnership firm or an OPC or an HUF or a cooperative society, you are entitled to get yourself an Udyam registration. And now comes to the actual definition of what an MSME is. Well, there are two classifications here, one on the basis of turnover and another on the basis of investment. On the basis of turnover, if you're a micro enterprise, you need to have a turnover of less than 5 crore rupees. If you're a small industry, then between 5 and 50 crores. And if you're supposed to be classified as a medium industry, turnover is supposed to be above 50 crore rupees. And your investment, if in case of a micro, should not be more than 1 CR. If you want to be categorized as small, it should be between 1 and 10 CR. And if you want to be categorized as a medium enterprise, it should not be more than 50 CR or 50 crores. Now, what are the benefits of getting yourself an Udyam registration? 16 major benefits. You get an interest rate subsidy on your bank loans. If the bank is, let's say, charging you let's say 8 to 10% on your loans, you may get a small subsidy and you will be eligible to get that loan at, let's say, 7-8%. So that interest rate subsidy is also there. You are also eligible to get something called as a collateral free loan. Most banks want a collateral for their loans. It can either be your assets or your stock or any other collateral for that matter. But if you're registered under Udyam, you get something called as a collateral free loan. You also get protection against delayed payments. The government has a portal called as the Champions Portal, wherein if your payment is delayed, you can go file a complaint, and there's a very, very high chance that your dispute with the other party of non-payment will get resolved within a few days' time itself. That protection against delayed payment is also available to MSMEs. You have certain beneficial provisions in the manufacturing sector. You also have ease of obtaining various registrations, licenses, and approvals. If you're registered under the Udyam, you are eligible to get funded under the CLCSS, which is nothing but the Credit Linked Capital Subsidy Scheme. If you want to take part in, let's say, some international trade fair or exhibitions, you get some concessional rates as well. There is a waiver of government security deposit or EMD, especially when you're participating in a few government tenders. Then you have concessions on electricity bills, stamp duty, registration fees waiver, direct tax laws exemption, then ISO certificate fees reimbursement, patent registration subsidies. You can register your patents, your barcodes at a nominal price after you get that subsidy. So these were a few of the high level benefits for any of the MSME registered entities. The next scheme is also called as the Stand Up India scheme. It's one of the foremost benefit being provided by the government of India to to especially women entrepreneurs, or entrepreneurs or borrowers, especially from the scheduled caste or scheduled tribe category, if they want to set up a greenfield enterprise, wherein they will get bank loans between 10 lakh rupees to 1 crore. And you might ask, what is a greenfield enterprise or a greenfield project? Well, it's just a project where new infrastructure is built on any unused land. It can be buildings, it can be roads, it can be bridges, or any other infrastructure project. So if you're an entity, or if you're a person who wants to set up a greenfield project, then you can avail of loans between 10 lakh to 1 crore rupees under the Stand Up India scheme. What's the eligibility again? You need to be an SC or an ST or a woman entrepreneur above the age of 18. You should not have defaulted on any prior loans, and loans will be given only and only for greenfield projects. You get a composite loan of up to 1 crore rupees for setting up any enterprise, especially in the manufacturing, trading, or the services sector. The next scheme, and this is something which is probably, in my opinion, one of the most popular schemes in the country, which is also called as the Mudra scheme or the Pradhan Mantri Mudra Yojana. The idea and the objective here is to provide loans to small and micro enterprises. There is no collateral, absolutely no collateral required to avail of this particular loan. Now, who can avail of this? Any Indian citizen who plans to get into any activity which is going to generate some income from non-agricultural sources. So basically, if you're starting any small business and you need a loan, you can avail of it through the Mudra Yojana. And what is the quantum of the loan amount? Anywhere between 50,000 to 10 lakh rupees. What are the different categories of loans given under the Mudra Yojana? First is something called as the Shishu loans, where you get loans of up to 50,000 rupees at an interest rate of 1% per month, and repayment period is up to 5 years. The second category is the Kishore kind of loans, where you get loans of between 50,000 to 5 lakh rupees. The interest rate, well, depends on the bank and the applicant's profile. So if the applicant is someone who is really credit worthy, that means he has been able to repay his loans in the past, then his interest rate will be reduced. And the last category is something called as the Tarun category of loans, where you're eligible to get between 5 lakh rupees and up to 10 lakh rupees. The repayment period and interest again depends on the bank and the profile of the applicant. Now, what kind of loans, or rather, what can the loans taken under Mudra Yojana be used for? Well, you can take a working capital loan. You want to revamp your business space, you can avail of a loan. You want loans for purchasing your plant and machinery, you can. If you want to purchase a two-wheeler or a commercial vehicle or even a car, you can avail of loans under the Mudra Yojana. Well, how to apply? Well, prepare a business proposal. And this is a big practice area for fellow chartered accountants. Being able to prepare project reports, being able to prepare business proposals, help banks with projections, help banks with financial data, or preparing just a business plan. Because most entrepreneurs who are opting for these kind of loans have absolutely no clue how to prepare a business plan or what goes into it. And trust me when I say this, we are on 30th March. Tomorrow is 31st, financial year end closure. And from a more personal perspective, I've had clients rushing behind me. Please prepare project reports. Please prepare project reports. And over the last month or so, I've had the privilege of preparing close to 10 project reports or business proposals already for loans as small as 5 lakh rupees to even crores worth of loans. And banks have been behind our life saying, sir, please do so within the 31st of March. We have a target to fulfill. Most banks generally wake up towards the end of the financial year. I'm sure there are a few people over here who have already experienced that. I have Sir here who I think echoes my sentiment. So basically, if you're a chartered accountant, I'm sure you will have a great area of practice, especially in this particular space when it comes to preparation of bank project reports or CMA data or financial projections for banks. Just select one of the categories of loans you want to take a loan under, approach one of the banks. In fact, if your client is not very comfortable dealing with banks and keeping the ethical guidelines in mind, you can maybe assist your clients in the negotiation aspect also. Uh, that's one area of practice for chartered accounting which you can definitely explore. There's also something called as the credit guarantee scheme, wherein the MSME ministry, along with SIDBI, has established something called as a credit guarantee fund trust for MSMEs. Now, what is the CGT MSE all about? In simple terms, they provide collateral-free loans of up to 50 lakh for individual MSMEs. So, who can apply? If you're an existing enterprise, you can. If you're a new enterprise, you can avail of loans under such a particular scheme. Candidates who meet the eligibility criteria can approach any of the banks or financial institutions which are out there and which are eligible under the scheme, or maybe even your any scheduled commercial banks. They would be able to assist you with their credit guarantee scheme. The next one is something called as the microfinance program. The union government has launched this particular scheme, and it has tied up with SIDBI, wherein the nature of assistance being that the government provides funds for the microfinance program of SIDBI, also called as the Portfolio Risk Fund. And if you're an NGO or if you're a MSME, you can apply for funding support to this particular program. And you need to approach the SIDBI, the Small Industries Development Bank of India, for this kind of a support. In my opinion, there are many other programs which are honestly out there, which are generally unheard of. Because what happens is the government launches the schemes, and obviously it's the banks and the financial institutions and the other people who are supposed to market and popularize these schemes. But unfortunately, in a country like India, we do not have that sort of marketing or popularization of schemes. Just as a small exercise, maybe, just maybe, you should just go up to your banker and ask him about the different kinds of loans available. And I was shocked. I'd approached one of the nationalized banks in my locality, just out of curiosity. I didn't need a loan. I just went in there asking him, hey, what are the kinds of loans or facilities available to people, to entrepreneurs alike? And he had a long list of around 10 to 12 products. He had a long list of around 10 to 12 products alone for, entrepreneurs, MSMEs, women entrepreneurs alike. Different sort of products, some with collateral, some without a collateral, so on and so forth. But what's the need of the hour is popularization of such schemes. So that, my friends, was a few of the benefits which the government provides to startups and MSMEs in the country. Obviously, there are many other schemes, but I think it was a little short a time for me to put in all of those. into this webinar. So yes, thank you very much for having attended this particular webinar. If there are, I will open the floor for questions. If there are any, there are audio issues. I think it's got sorted out now, sir. I will open up the floor for any questions if there are any.
And start with you, Maggie. So, in the beginning, right, we discussed the startup definition, right? It all focused on the innovation and scalability. So, is it both required, or even innovation, or let's say I have a product or I have a company where I don't feel it's an innovative, but I have the scalability. Still, I can apply for the benefits.
Okay, so for the benefits of the members attending online, one of our sirs available here at the branch, he had a question wherein he's asking, is innovation the only criteria? I mean, if my idea is scalable, it's really scalable, but it's not innovative, can I still be registered, and can I still get the kind of traction and funding that I can from investors and other people alike? I hope I got the question correctly. And quite rightly so, you can. So, innovation is not the only criteria. You need to be able to solve something called as a problem statement. So, for any startup which is out there, you need to first of all define something called as a problem statement. You need to be able to solve some problem which is out there in the society. And it can be any problem. It can be education, agriculture, space related, blockchain related, or any tech related stuff, anything. You need to define your problem statement. Now, once you have a problem statement in mind, you need to start developing something called as an MVP. That's called as a minimum viable product. Now, what does the product do? The product basically helps you overcome the problem statement, which you just defined. Now, that MVP, the product, may be innovative or may just be a ripoff of an existing product. For example, Uber and Ola. Uber launched a platform way before Ola, and Ola was a much more recent entrant, last 10, 12 years. So the idea which it is in fact, and many of the startups in India today are pretty similar in nature. You have Byju's, you have Vedantu. I mean, I didn't want to name startups, but giving examples of case studies, you have Zomato and Swiggy, one of the most popular.
There is the scalability and not the innovation.
Correct.
Because Uber was there, Ola came.
Correct.
Ola is also in the same business.
Right. So in case of Ola and Uber, you had Taxi for Sure, which followed up. In China, you had a company called Didi Chuxing in a similar kind of a space. So Didi didn't work out; it had to shut shop. Uber didn't work out in China, and they had to exist. But in India, Ola worked out. Taxi for Sure also was doing great before it was acquired. Was it innovative? No, but they still ended up getting a huge amount of traction. Byju's, Vedantu, Unacademy, are they really innovative? Well, they're all pretty much the same with little bit of variations here and there, but they are still able to attract tons and billions of dollars of funding from investors alike across the globe. Why are they really innovative? Probably not, but because they are scalable and they are able to solve problems.
Any parameters on the scalability that if I have so much of users or so much of users or so much of XYZ, is there any parameter where I can say or I can prove that I'm scalable or I have a scalability or something?
So
Because
for
I understand the Byju's and the Ubers and all. I don't think so. They have even applied for the startup India scheme. But when as a new startup comes, how the government see the pitch then, because nothing is there except the scalability. It's only on the minds. So what are the parameters practically that we?
Well, the question here is for the benefit of the online members. What are the parameters for becoming scalable? Because is it defined by the government, or is it defined by some rules or some act or some legislation? Well, no, there is no defined parameter as such in any law anywhere across the world.
Practical experience.
What depends on what is scalable depends from sector to sector. So what is scalable in the edtech sector may be different from what is scalable, let's say, in the world of IoT or maybe in the world of blockchain, which are still, at a nascent stage. But the edtech space is still developed. So, for example, if you're an educational, I'll take edtech as a platform. So, let us say you are in the same space as Byju's, for example. Now, Byju's obviously has around 50 lakh users, and I can stand corrected on the number of users they have. 50 lakh users alone. That's it. From a population of 130 crores. 50 lakh user base. Byju's has got billions of dollars worth of funding. It's the epitome of how successful a startup can be in India. So just with 50 lakh users, if Byju's can reach that level, you can imagine how much of a scalability an edtech platform needs in the country. Whereas if you are a startup in, let's say, the agri-tech space, you have a greater pool to choose from because at least, if I'm not wrong, 60% or maybe even more of India's population is into agriculture. Please, you can correct me if I'm wrong. So the pool for scalability of an agri-tech startup is much greater. You have a chance to become more scalable, get in more number of users, get in more profits, touch the lives of more people in the agri-tech sector vis-a-vis the edtech sector. So this was just a small example. But like I said earlier, how much you can scale and to what extent all depends on the sector you are in, and also from the perspective of the investors. So if I'm an early stage investor, I cannot expect you to become scalable from day one. You have to follow a gradual approach. So let's say you are going in for pre-series A funding or a seed round of funding. The max amount of funding you can get is around 1.5 crores or maybe a little more. But for that, you need to achieve, let's say, some amount of scalability specific to that sector. But the higher round of funding you're going in for, you need to depict growth in your revenues and cash flows, and obviously the valuations directly. So the better the growth you can depict, the more the funding you will attract.
Point that various series of funding require various benchmarks. But I understand that from the private sector point of view, where VCs comes into pictures and everything, but how a government entity, how the government is looking at, by giving an example, because the number you look at, right, 320 is very, very minimal. I'm like, where we say that, like, startup is like after US or China, this is the country of startups. You look at the number, just 320 entities have got the startup recognition with perspective of ADI, I'm like, sorry for that section, that 100% exemption of the tax. I'm little worried or concerned about how the government is looking at in terms of benchmarking when it comes to the definition of innovation and scalability.
Okay. So let's try. So the question here is for the benefit of online members, how does the government look at innovation and scalability? And sir is citing the example of just 320 startups getting the exemption under section 80 IAC. Well, I would like to make a distinction here. The registration under the Startup India scheme, you have more than 25,000 startups who are registered. But here we are talking about an income tax exemption. And this is again my personal opinion. Let's not color or generalize what the department is about. The income tax department is generally a little, how do I put it, a little traditional in its approach. You have people who still follow a much more traditional mindset when it comes to, let's say, granting exemptions, tax exemptions especially. And obviously, the objective of the income tax department is to get in as much as revenue as possible in the form of taxes. So the amount of scrutiny which is going to go into your application is very huge. So that's the reason why the percentage of startups getting income tax exemption vis-a-vis Startup India registration is not commensurate. It's very little because the tax department goes into greater detail, and therein they are probably not looking only at the aspect of innovation or scalability. There are other parameters also. Do you genuinely fit the bill to be given an income tax exemption? Because the objective there is not to promote innovation. The objective there is to get in as much tax collection as possible, which I'm afraid is a very traditional way of looking at things.
Because otherwise, I don't see any much benefits being given by the policy. Like we talk about the patent fast track, I think it's on a paper. No startup I feel would actually go and disclose their patents and everything when they reach to a public platform, right? Anyone can copy this. So I think first they go for patents, then they come to the no certification or getting the exam, isn't it? So I think this patent fast track or the lower cost it's just a paper thing. I don't see any startups actually going and getting that nominal benefit. They are actually looking at higher benefit, which is out of 10 years, 7 years, I get 100% tax exemption. And once I get that recognition, only the investors who invest in me get an exemption in terms of capital gains or even the angel tax. I understand is the different form that we have to put.
So for the benefit of online members, sir is saying the process of patent, fast track patent application and reduced cost of filing the patent application is just on paper. It has not been very helpful. Well, I beg to disagree for the simple reason that, of the almost 8 to 10,000 odd applications, I'm a little hazy on my numbers. It was there on the slide deck. Maybe I just forgot about that. Close to 1,300 people have already got their patent applications fast tracked, examined, and more than 800 of them have got their patent applications approved, which is a very, very big achievement in just a span of 5 to 7 years since the launch of this particular scheme. And as regards protection of patent rights in the country, yes, I do agree that the judicial system in India may not be as fast as, let's say, Western countries, but we are slowly getting there. And there is greater awareness about innovation. There is greater awareness about the need to protect it, and the courts are recognizing that. That's the reason why the allure of registering patents in India is rising slowly and slowly. Earlier, maybe let's just say 4 5 years down the line, and I speak from personal experience, the moment we used to tell startups to get a patent, they would say, hey, I'm not going to get that thing in India. It takes years and years to get there, and it's very bureaucratic. And most importantly, there's the legal protection under Indian laws is very low. So I might as well go to, let's say, Geneva, or let's say Singapore or the US, where if it's a little expensive there, but if I get the patent there, then I have access to global pool of investors, and there's greater value for that. But now the situation has reversed. There are startups in India and even abroad who are saying, hey, let's go to India and get those patents done. Because this scheme has actually changed the perception regarding the Indian patent industry as a whole. And I'm sorry, I'm calling it an industry.
I mean, what my experience has been with the startups is the investors always say that please, open an entity either in US or in Mauritius or in Netherlands and create IP there, and we will do the funding there, and from there, and subsidiary in India will get the money, and like, and this is also been sometimes rightly used as a shipping on like shopping of treaty or something where they can route the money and everything. But having said that, most of the investors, when it comes to the patents and all, they prefer to have it in other countries like US and all, and they prefer to fund those startups where have IPs outside. Even if you look at Flipkart or these things, they are not basically an Indian company. They are registered with Singapore.
Flipkart is registered in Singapore. And I think I quite agree with you also on that front. When you say that people want to set up entities in, let's say, Delaware Flips, or maybe set up entities in Singapore or some other Gulf countries for that matter. But the reason for setting up entities there is not the IPs. It's not just, it's the tax havens, and second, it's also the ease of doing business there, and also the pool of investors that you get there. So if you want to really broad base your pool of investors and attract foreign investors into that, obviously it makes sense for you to set up an entity in, let's say, a Delaware, or let's say a Singapore, because you have global investors, or maybe even Dubai for that matter, because you have global investors coming in there. Whereas in India, you have broadly Indian investors coming in. Having said that, I said that the scene of Indian patents is improving. It's not improved completely. It's in the process of improvement. And the decision of setting up an entity, whether in India or let's say in Singapore or any other entity, is not driven only by the need to get patents. Getting the need for patents is a very small factor. Biggest factor is obviously funding opportunities, business scalability, and tax treaty. And there's no harm in treaty shopping, or
Take Singapore. They're not bothered about it. It's like first we are there.
absolutely. And it's so much more correct. It's so much more easier to do business in a country like, let's say, Singapore, or maybe even the US, or maybe even the Gulf countries when compared to India. That too is a fact. And that's why India is obviously moving slowly up the ladder of ease of doing business rankings. If I'm not wrong, a couple of years back, they were around 72 or 73 on the rankings. Please correct me if I'm wrong. So from, let's say, 120, we are like 73. That's a quantum leap in a span of just 4 to 5 years' time. I'm sure we'll do even better. There is scope for improvement, right? So from what we were to where we are heading, it's a slow and gradual process, but we're definitely heading there.
Moving on to the next. Let's say I have an income tax exemption. I got it from the like Startup India policy and everything. But then let's say I got that income tax exemption, let's say on the year third year where I've taken it up. And let's say on the sixth or seventh year, I decided I don't want to do that business. It's not giving that margins, or it's very tough to sustain with that business model. I change my business model. I don't change my product. Even then, can I continue to go ahead and take that exemption?
No.
I'm just changing my business model. I'm not changing my business.
No, so if you're changing your business model per se, which is okay. For example,
let's say they say that we will not do an online teaching, we will do a physical teaching. The business is an education sector providing quality education to people. Shifting of business model is okay.
yes, change of business model is okay. But if you change your business entirely, then obviously the objective of the certificate is lost. Yeah, because one of the major definitions of the of startup is innovative and scalable business idea. I hope I answered that question. There's one more question here from an online member. How can CAs get empaneled in the Atal incubation scheme as a service provider or mentor? Well, to be very honest with you, uh, there are websites available for Atal incubation schemes. There are two ways to do it. Either you go onto the website and approach them with your requirement, and they will have a thorough due diligence process for that. Else, if you already know someone who is a member of one of those AICs, or who is empaneled there, you can obviously get in touch with them for a recommendation.
Mridul, we have one last question from an online participant.
We
Can
are
a
unable to
4-year-old
hear you.
startup apply for the startup certification? From Santosh Kumar.
Pramod, you're on mute.
Yeah. There's one last question from the online participants. Can a 4-year-old startup apply for the startup certification? Am I audible?
You're on mute. Right. So if there are no more questions.
I have one last question.
Yes.
Can a 4-year-old startup apply for the for the
I can't see the question.
Yeah, it was only that. Can a 4-year? It was sent to me.
Yes, up to 10 years you can apply for an exemption under the Startup India scheme.
Are we done?
So what is the your answer to that? On the one more query, that how do we get listed on the incubators as consultants or?
So either the question again is how do you empanel yourself on the Atal incubation this thing? They have dedicated websites. So you can either visit their websites and get in touch with them on the numbers or the email IDs provided. Or if you already know any existing office bearer of the incubation center or any mentor who's already empaneled there, I think you should definitely get in touch with them.
Well, I think it's time to wind up our session.
Yes, sir.
Well, thank you, everyone. Thank you, members who are present physically and virtually. And of course, definitely a thanks to Mr. Mridhul taking out your time and giving us an informative session on the startup world and the MSMEs. Definitely did give our insights about it. On behalf of the Bangalore branch of SIRC, I thank all of you present here for this wonderful session. Thank you, Mridhul.
Thank you.
Signing off. Thank you.
You did see them much more. They come present their ideas.